Hello, Mijun here from the University of United States Stock Theory, focusing on fundamental United States stock investing principles. Let's start today's United States stock news for July 10th. Welcome again to Mijun, who is consistently sticking to the basics of United States stock investing. Today, I'd like to start by reading a comment left by one of our valued subscribers and reflecting on it for a moment. Personally, I really like this person's username. It's Naneonaro, which is a very meaningful and thought-provoking name. I've mentioned this before, but my children still aren't very good at speaking Korean. They've lived abroad their whole lives. Also, when my children were young, I was the general manager at a hotel, so we usually lived in hotels. So whenever we left our room, all the hotel staff spoke English. So even though both their mom and dad are Korean, our kids aren't very familiar with the Korean language. So inevitably, I wanted my kids to improve their Korean and also hoped they would learn more about Korean culture. Sometimes we watch Korean dramas together. One of the dramas our family recently watched together is called Itaewon Class. I'm not sure if you've seen it. In some ways it might seem a bit childish, but personally I really enjoyed watching it. And there's a really meaningful line in this drama. I don't need anyone else's approval to be myself. There's a cool message like that. Personally, I believe that most of what we consider to be facts or truths are actually just opinions. That's how I live my life. Since I've lived in more than 6 countries and over 10 cities for more than a year each, I've met people with truly diverse cultures, religions, and beliefs. Through those experiences, I realized that depending on your perspective, the same thing can look completely different. So I believe it's important for us to keep holding on to our own beliefs without getting hurt by others' opinions. Of course, we should also grow by giving and receiving influence from other people's opinions. Anyway, I don't need to apologize for being myself, and I don't need to convince others either. Personally, I found this line very impressive. Anyway, this is a comment left by someone with such a cool username. Mijuan, thanks as always. What's your question? I understand that your goal is to retire with 3.3 billion won in United States stocks. Then, after you reach your goal of 3.3 billion won, will you partially sell your growth stocks to cover your living expenses and keep investing the rest? Or will you switch the entire 3.3 billion won to dividend stocks and live off the dividends? I'm curious. If it's the former, you won't really be able to retire and you'll have to keep working hard like you are now. If it's the latter, with 3.3 billion won, which dividend stocks do you think you should invest in to both live off the dividends and grow your assets? If you reach 3.3 billion won, you might want to aim for 5 billion next. So, when will you actually be able to retire and finally feel free from money to truly enjoy financial freedom? That's what I meant. In a way, this is actually more important than investing itself. But as we check the stock prices every day, we tend to overlook these fundamental thoughts. You've left a really good question. I have a steady income, you know. I earn revenue from YouTube, and thanks to our valuable Mijun members who have joined the paid membership, I receive a considerable amount of income every month. So my investment funds are increasing as well. Taking this into account, I calculated how much I would need to invest in order to retire. As you can see here, my annual target rate of return is 20%, and if I invest for 6 years at a 20% rate of return, the current 1.1 billion won in my account could grow to 3.3 billion won. But there's one thing missing here, and that's the additional investment funds I can put in. So, unless the Mijun membership goes under, I think a considerable amount of investment funds will probably go into this. If that happens, I'm hoping that in as little as 3 or 4 years, or at the latest 5 years, I'll be able to reach my target amount and retire. If that happens, since I'm in my early 50s now, I'm planning that by my mid-50s I'll be able to reach 3.3 billion won and retire. By my mid-50s, I think it might be a bit difficult to keep watching the stock market for more than 12 hours a day and continue investing in a healthy way like I do now. However, even so, I have no intention of stopping work in my mid-50s. I think there are two ways we can find fun and enjoyment in life. The first is through consumptive activities. For example, buying and eating delicious food, drinking and dancing, going on trips and shopping are all very enjoyable. But on the other hand, there's another area, and I would like to call this productive activities. For example, studying, exercising, and investing are all very productive, but also enjoyable activities. For those of you who are seriously involved in investing like I am, you probably feel that investing as a productive activity is much more enjoyable than most consumption activities. There are people who read diligently, and there are also people who work out very hard. Actually, even if it looks painful to others, it's really enjoyable for them. It's the same with investing. You put in a lot of effort, spend a lot of time, and use up a tremendous amount of energy, but honestly, there's nothing as fun as investing. Well, even so, I honestly don't plan to keep searching for stock news and analyzing it for more than 12 hours a day after my mid-50s. So at some point, I want to stop spending so much time and energy on this, and I hope to live my life by mixing productive and consumptive activities in a balanced way. When that time comes, I think I'll probably move most of my funds into ETFs. Because when you invest in individual stocks, you have to constantly check the ever-changing news. I have so many stocks I'm investing in, and I need to keep track of what news is coming out about them, what mergers and acquisitions are happening, how are the earnings results, and how is the market evaluating them. We have to keep updating ourselves so that we can reduce risks and achieve returns that outperform the market through individual investments. In a way, it's being quite greedy. But when I reach my mid-50s, I'll cut back on this process. I can simply say that my plan is to invest in the market index with peace of mind, just looking at the bigger picture. When that time comes, I think the Mijon channel will probably be mostly about stories of life. That's what I've been thinking. To the person with the wonderful username Nanun Naro, who left this precious question, I hope my answer was helpful. Alright, then let's get started with today's Meek Jungshi news prepared for July 10th. Today as well, let's start by going over yesterday's Meek Jungshi market conditions. Now let's examine the S&P 500 map. The market was mixed yesterday as well. The differences between sectors are quite clear. For example, consumer defensives, which are essential consumer goods that are not affected by the economy, mostly fell. Real estate and energy sectors also dropped significantly. However, the tech stocks we favor, except for software, mostly showed an upward trend. Also, among the Magnificent Seven, all stocks except for Tesla are marked in a very clear green. So yesterday, the rise was mainly led by tech stocks, which pushed the overall market index into positive territory. That's how we can sum it up. Next, let's look at market breadth. The market breadth was 71 and 91, so there was almost no change. And the number of stocks with a good long-term trend increased slightly from 58 to 59. That's how we can summarize it. Next is the volatility index, which dropped again to 15.94. I've mentioned several times that such a low volatility index is positive for the market. Usually a market with high volatility is a difficult one. When volatility becomes very calm, the index won't suddenly rise by 3% or 5%. Still, since there's a high chance that the market will steadily maintain an upward trend, it's actually a very desirable situation for investors, both because it feels reassuring and because stock returns are usually very good. That's how I would explain it. Nevertheless, the fear and greed index is still very high. Yesterday, it went up one level from 74 to 75. It's extreme greed, so just looking at the fear and greed index, it feels like we should sell our stocks, and that brings a bit of anxiety. And it's the same with the market score provided by Choice Tang. It's gone up another level and is now showing 94. Therefore, even in the greed phase, it's now at its peak, and it's signaling that a technical correction will come. Nevertheless, we'll take a look at one last thing, which is the artificial intelligence survey results. Now, if you look in the current market, 41.4% of investors predict that the United States stock market will rise in the next 6 months, expecting a positive trend. If you look here, 35.6% of investors think otherwise, believing that stock prices will actually fall after 6 months, holding a negative outlook. Now, of course, these views are actually improved figures compared to the past few weeks. It had dropped to as low as 33.2% on June 18th. So compared to a month ago, there are a lot more people with positive opinions, and the number of people with negative opinions has decreased significantly. As more cash that was on the sidelines is being injected into the market, stock prices continue to rise. We can see this phenomenon here. Nevertheless, 35.6% shows that, compared to the historical average, there are still quite a lot of people with a negative outlook. So there is still some more money that could come in. Now, with 41.4%, the positive outlook has increased compared to the historical average. That means there are some people who will take profits, but for now they're still holding on to their cash tightly. The fact that there are still many people hoping and praying for the market to drop can actually be seen as a positive sign. Next, let's look at the performance of Mijuan's top picks. Since tech stocks generally performed well yesterday, it was the same for Mijuan's top picks. All stocks except for 4 recorded gains. At the very top, B2 rose by 5.57% second, Coinbase surged by 5.36% third, Strategica increased by 4.65%. So in conclusion, you can see that the top 3 stocks are all related to Bitcoin. In addition, Credo Technology also achieved an additional increase of 4.53%. Distro went up by 3.59%, Celestica by 3.34%, Palantir by 2.45%, Broadcom by 2.24%, Trade Desk by 2.16%, and Nvidia rose by 1.80%. Taiwan Semiconductor Manufacturing Company rose 1.75%, Meta 1.68%, Amazon 1.45%, Alphabet 1.30%, Advanced Micro Devices 0.43%, First Solar 0.31%, and Bitcoin inched up 0.01% to 111,000. Now the rest have dropped. Nextracker dropped by 0.03%, Tesla by 0.65%, Uber by 0.86%, and Talon Energy fell by 1.91%, performing the worst. Now, among these, there's a standout stock, and that's Nvidia. Nvidia rose an additional 1.80% yesterday, surpassing $162. This is quite significant. For the first time in United States stock market history, it became the first company to surpass $4 trillion. That's an incredible positive development. So Nvidia, which we all love, has achieved the historic $4 trillion milestone that even Apple and Microsoft couldn't reach. I can share some amazing news with you. There's another valuable comment related to Nvidia, so I'll continue talking about Nvidia while reading this article. This is a valuable comment left by someone using the username Letters to Sun. Hi Mijuan, I'm a new investor who began investing a small sum in United States stocks 3 months ago. Without any information, I jumped in and made reckless trades, frequently buying and selling, which led to really poor investment decisions. After discovering the Mijuan channel, I stopped watching other YouTube channels and now only watch the Mijuan channel every day. Since I'm a beginner and felt anxious, I kept buying and selling frequently, so I don't have any stocks bought at a low price. Now I'm holding as much cash as possible and have stopped making additional purchases. Miju said that the market will continue to do well, but that a short-term technical correction might come. However, when Nvidia surged yesterday, I started to feel impatient. Should I just wait patiently? Also, I'm curious if there will be another discount plan for the all-in-one membership. There are currently no plans for another all-in-one membership discount, as the recent discount event just ended. So, if you look at the pinned comment or the description box, you'll find a link to sign up for a monthly membership. For those who need it, you can become a monthly member for now, and if the annual discount comes back later, you can take advantage of it then. And if there's anyone who really wants to become an annual member right now, I think it would be good if you could send me an email. If you come to the main page of Mijuan, you'll see all the information listed here. And if you look below, there's a section for advertising and partnership inquiries. My email address is listed there. So, if you feel like you need to become an annual member right away, please send me your contact information and I'll ask the manager in charge to assist you. Now let me answer the question left by Letters to Sun. I also don't know when a technical adjustment will occur. It could start dropping as early as today, or it might drop in August or even in September. Now, let me tell you a historical fact first. July is usually the best month of the summer. So overall in July, stock prices tend to go up. So personally, I think the upward trend will probably continue until the end of July, and then there might be a bit of a correction around the end of July. That's just my prediction based solely on historical averages. That's all I can say. And how much cash you have right now is also very important. In my case, I usually keep about 20% in cash. That's what I mentioned. Personally, I think it's right to always have about 70% of your total funds invested in United States stocks. Because historically, the United States stock market has always gone up with a probability of 7 to 3. Downward periods account for 30%, while upward periods make up 70%. That means there's a 70% chance it'll go up today as well, and a 30% chance it'll go down. Therefore, since you should bet on the higher probability, you bet on the 70% chance of it going up. But there's still a 30% chance it could go down. In the end, if you use the average, it would be wise to invest about 70% of your funds in stocks and keep the remaining 30% in cash. That's the kind of advice I'd like to give. And if you look here, it seems like you're interested in Nvidia. So I'll briefly do a technical analysis of Nvidia. Currently, the momentum is still alive. Out of 26 indicators, 2 are for selling, 8 are neutral, and 16 momentum indicators are suggesting a buy. But if you look below at the relative strength index, it's up to 73 and 62. When the relative strength index goes over 70, it's considered overbought. So we need to keep in mind that the situation is a bit overheated. Now let's take a look at the chart. Nvidia's stock price has broken through the long-term resistance line and the moving averages are in a bullish alignment. So technically, it's sending a very strong bullish signal. Now, if you look here, there were 2 very strong resistance lines, but they were broken through consecutively and it broke through with a very strong surge. Technically, it's very bullish with the moving averages aligned in order and trending upward. From a technical perspective, it's very bullish. That's how you should see it. However, in the short term, since the stock price has surged in a short period, it's likely to be in an overbought state. Maybe. So if a correction comes, the previous resistance zone of $155 to $156 will become an important support level. It's right here. This marks the all-time high. As it surpassed the previous peak, this level will likely become a robust support. Even if it dips, there's a strong possibility of a rebound from here, which is what we can anticipate. Now, if this support level is successfully defended, we can assume that the upward trend of Nvidia's stock will continue. So, to summarize, looking at this chart, there is a possibility of a short-term pause. Now, the reason I think this way is because if you look here, there's an orange line. The orange line is the 20-day moving average. When we look at the short-term trend of a stock price, we use the 20-day moving average, right? And this 20-day moving average has been leading the stock price upwards since the end of April. Whenever it seems like it might fall, it bounces back from here. And there's one very important fact. When the gap between the 20-day moving average and the stock price widens a lot like this, there was a technical correction afterward. And here too, after rising a lot, it turned down again. As it kept going up, if you look here, the gap widened significantly once more. After that, you can see a slight downward trend. And now it's surging again. And the gap between the 21-day moving average and the stock price has started to widen again. So it's possible to expect that another buying opportunity might come soon. Anyway, as of now, it shows a very positive chart, having entered a new upward phase by breaking through an important resistance line. Nevertheless, since the 20-day moving average is widening, I think there might be a slight technical decline soon, which could give us another buying opportunity. I'll wrap it up like this. The next article features Palantir. Personally, I think this article is very significant. I gave it the title of Mijun's recommended content. If you look at the title, I've rephrased it in an interesting way as Palantir is becoming the government's Apple Store. Let's take a look at what it's about. Palantir Technologies has formed a partnership with Tomorrow.io, an artificial intelligence-based weather forecasting provider, and it's summarized that they are seeking joint go-to-market opportunities for customers in defense, government, and corporate sectors. However, there's a key element in this partnership. Tomorrow.io is now able to participate in Palantir's Foundry Start program. Here, the keyword is Foundry Start, so let's take a closer look at it. This means that Tomorrow.io can provide services to United States federal government employees through a simplified process, and it also means they can expand their operations within the federal government. There are other companies using Palantir's Foundry Start program, including Anthropic, Grafana Labs, and Virtualytics. So you can see that quite a lot of new companies and startups are using Palantir's Foundry Start program. Palantir's head of defense, Mike Geller, appears. He explains that they built Foundry Start to accelerate the government's ability to leverage the best emerging innovative technologies. What this means is, I'm pleased that by enabling federal government personnel to use Tomorrow.io while ensuring strict compliance and security requirements for handling United States government data, we are helping to increase productivity and efficiency across the government. It may still be confusing. Allow me to clarify the meaning for you. The federal government uses various programs, and one of them is Tomorrow.io in order to use Tomorrow.io. Since it's the government, they're going to be very strict about data processing, and there are also a lot of security requirements. But you can see that Palantir solves this part. Now let's take a quick look at what kind of company Tomorrow.io is. It was founded in 2016, and this company provides weather modeling by utilizing space-based observation and artificial intelligence prediction. And what about this technology? By being integrated into Palantir's proven real-world decision-making engine, it will provide operational advantages for government agencies and businesses in dealing with extreme weather events. Palantir, a decision-making engine proven in real-world situations, plays a role at this point. So what this means is that Tomorrow.io uses various data with Palantir to help make decisions together. The advantage of Palantir is this. It gathers meaningless data scattered everywhere, interprets the meaning of this data, and then suggests what would be the best course of action. So Tomorrow.io also has a huge amount of useful data, and by utilizing this data, Palantir draws conclusions and ultimately suggests solutions on what to do. You can understand it this way. Tomorrow.io's Chief Executive Officer and co-founder Simon Alkabetz appears. In the age of artificial intelligence, those who own data will own the future. He's making a very meaningful statement. The partnership with Palantir opens up a new dimension of resilience for the world. The only full stack equipped with exclusive data from space and operational-grade artificial intelligence modeling Agent Intelligence. As a weather company, we emphasize that we are defining next-generation decision-making and competitive advantage together with Palantir, a truly synergistic partner. For reference, in 2024 alone, the United States has experienced more than 27 weather and climate disasters, each causing over $1 billion in damages. And if you look at the total damages, it reached nearly $183 billion, and the number of casualties was 568. So, in just 1 year, weather and climate disasters caused this tremendous amount of damage and casualties. But going forward, based on data from Tomorrow.io, it seems that Palantir can provide solutions on how we can prevent and address these issues using data. That's how we can interpret it. Now, in my opinion, this article is too significant to be understood in such a simple way. Now, I've written down some details here. This partnership with Tomorrow.io goes beyond simply adding another Palantir collaborator. Personally, I believe this is very important news that shows how much Palantir's role and status are evolving in the huge market of the United States federal government. Startups with cutting-edge technologies like artificial intelligence and space data analysis keep emerging, and many companies are appearing that can provide useful functions to the United States government. But what about these kinds of startup companies? In order to make deals with the United States Department of Defense or government agencies, they have to go through very complicated and costly security certification processes like FedRAMP or Impact Level 5 and Impact Level 6. So because of this, it's almost an impossible barrier for startups. It takes too much time and is a huge financial burden. But here, Palantir is playing a huge role, isn't it? Palantir. They already have their own platform, the government software we know well called Gotham. Thanks to Foundry and Gotham, they've already obtained all these complicated security certifications. Now let's talk about FedStart. This program allows other innovative companies to operate on the certified Palantir platform. It's like building a kind of highway so they can provide their own services. So you can think of it as helping them fully demonstrate their capabilities within this certified program using FedStart. So startups like Tomorrow.io can skip the security certification process that could take years if they did it on their own. They can enter the entire federal government market right away through the gateway called Palantir. This is the effect we can observe. So, in this way, Tomorrow.io's artificial intelligence weather data and even Anthropic, which is also a customer of Palantir, are all involved. And various different technologies are now being incorporated into the Palantir platform. So, when the best technologies are integrated into the Palantir platform like this, it will become increasingly difficult for government clients to leave the Palantir platform. This is similar to how the various apps in Apple's App Store increase the value of the iPhone, because a very powerful ecosystem is formed. And once you get into this, it creates a lock-in effect that makes it impossible to leave. That's how you should see it. So Palantir is no longer just a company that integrates and analyzes simple data. Now Palantir is evolving into an operating system that curates and provides cutting-edge technologies. Government clients, by using just the Palantir platform, they can easily and quickly access and utilize all the latest technologies they need, such as weather forecasting and artificial intelligence analysis. It serves as this kind of platform. So what is the value of the Palantir platform? The more partner startups there are, the more its value will increase exponentially. Right now, only a few companies, like artificial intelligence companies and weather data companies, are using this Foundry platform. As more and more startups from various fields join, eventually the only platform the government will need is Palantir's. This can also be interpreted in this way. So what does this partnership mean? Palantir is going beyond just being a company that wins government contracts. It can be interpreted as a major strategy where Palantir serves as a core platform leading the digital transformation of the United States government and as a gateway or gatekeeper connecting innovative tech companies with government clients. Palantir is continuously increasing the value of its platform through this gatekeeper role. It means that Palantir is building an irreplaceable and monopolistic position in the government market. This is very significant news. Now next is the momentum of Palantir stock, and the momentum is very strong. Out of 26 indicators, only one suggests selling and 17 recommend buying. In conclusion, it's a strong buy. Now, the current relative strength index is only at 59.78, so at the moment it's not overbought. Therefore, we can see that there's still a lot of room for further growth. If you look at Palantir's stock chart, you can see that it's in a very strong upward trend both in the short term and the mid to long term. The moving averages are aligned in order, and the major moving averages are serving as strong support levels. Therefore, from a technical perspective, it's very positive. It's a bit similar to Nvidia, right? After easily surpassing the previous high, it's now setting a new high and undergoing a bit of a technical correction. In the short term, the 21-day moving average is at 137.76. Pay attention to whether it breaks below the 21-day moving average and the $130 support level. And if this support level holds, there's a high possibility that the upward trend will continue for a while. So that's something we can look forward to. Now, this is it. I mentioned that this orange line is the 21-day moving average, right? In the case of Nvidia, it started to drop quite a bit from the 21-day moving average. I explained that there's a possibility of a correction, and Palantir is already undergoing one. It followed the 21-day moving average, but the gap eventually widened, leading to a correction. The fortunate part is that after dropping below the 21-day moving average, it quickly rebounded, and now the stock price is back above the 21-day moving average. Therefore, if it breaks through the previous high again, I'll conclude on a positive note by saying that this upward trend is likely to continue. Lastly, the final content prepared for today is the Mijun podcast. Today's podcast features two stocks. The first is Nvidia and the second is Advanced Micro Devices. Recently, there was big news that Open Artificial Intelligence and Advanced Micro Devices have formed a partnership. In this podcast, we've put together an analysis article on just how negative this news is for Nvidia, how much it could affect Nvidia's market share in the future, and on the other hand, how much of a positive this is for Advanced Micro Devices. That concludes today's broadcast. I sincerely thank everyone who stayed with us until the end of today's broadcast. Recently, many of you have been leaving a wide variety of thoughtful and in-depth comments, so reading your comments has become really enjoyable and helpful for me. Your valuable feedback and questions are always welcome, and I look forward to seeing many more comments from you. Let's stay united until we can all retire by investing in United States stocks. This is Wait. Have a happy day. Thank you.
Hello everyone, we're back again so soon because I wanted to quickly share the analysis article with you.
I'm here. Then shall we get started right away? This analysis article is about Nvidia, but it also includes news about advanced micro devices and OpenAI joining forces, not just information related to Nvidia.
That's right. So today we'll be basing our discussion on the analysis article. Let's take a deep dive into what this news could mean for Nvidia.
For Nvidia, the market powerhouse, could this be a threat or an unexpected opportunity? First,
to get straight to the point of the article, they are still maintaining a strong buy recommendation for Nvidia. That's because demand for data center GPUs is booming right now, and the artificial intelligence ecosystem itself keeps growing, so there's plenty of room for Nvidia's profits and stock price to rise even in 2025. That's the main point of the analysis.
The news that open artificial intelligence and advanced micro devices are working together is definitely something to pay attention to, but the article actually sees this as a sign that the market is getting bigger, right? What exactly are they collaborating on? Yes.
What it means is that Advanced Micro Devices has formed a strategic partnership with Open Artificial Intelligence to develop high-performance inference, in other words, high-inference GPUs. They're working together to create high-performance GPUs that are needed when artificial intelligence models use what they've learned to actually make predictions or produce results. It seems to be a collaboration related to the soon-to-be-released Instinct MI 400 GPU.
From Advanced Micro Devices' perspective, it's a recognition of their technology and a chance to build relationships with big players like Oracle, Meta, and especially Microsoft.
That's right. Microsoft
is also the biggest investor in open artificial intelligence, and just last year, they bought almost 500,000 Nvidia chips, so they're a huge customer. That's right.
That's a very important point. So this goes beyond Advanced Micro Devices just selling chips, like the enterprise artificial intelligence platform that Nvidia has built. Like that, they're envisioning their own artificial intelligence ecosystem, a big picture that covers everything from GPU-CUs to CPUs and even related software. You can interpret it as a sign of that.
I see. But despite these moves, the article says that Nvidia's dominance won't be easily shaken, right?
Yes, that's right.
What's the reason for that?
The biggest reason is definitely the overwhelming market demand. There's such a shortage of GPUs needed for artificial intelligence development and building data centers that the market itself is just growing tremendously. And the second reason is market share. If you look at this, as of the first quarter of 2025, Nvidia's artificial intelligence GPUs, what we commonly call graphics cards, their market share is a whopping 92%. Advanced Micro Devices is at about 8%. Wow.
The 92% versus 8% gap is substantial, and the difference in profit size is also reported to be quite significant. Yes.
That's right. If we look at the expected net profit for the first quarter of 2026, Nvidia is around $18.8 billion, while Advanced Micro Devices is expected to be about $790 million. Of course, Advanced Micro Devices' profit growth rate is 416% compared to last year, which is amazing, but wow.
The growth rate is incredible.
Then, how should we look at the stock price and valuation? Recently, it hit a new all-time high again, and according to the articles, there's a possibility it could go even higher in the future. Is that right? Yes.
The stock price recently surpassed $157, an all-time high. Technically, there are some short-term overheating signals on the lower size indicators. However, the so-called golden cross has appeared, where the 50-day moving average breaks above the 201-day line, showing a strong upward trend. The valuation is about 27 times based on the expected earnings for 2026. The article says that considering this growth potential, a minimum target multiple of 30 times would put the price at around $172. And if we look at it more optimistically, a target multiple of 30 times could even make $200 possible. 30 times.
A PE ratio higher than this, of course, the growth is tremendous. But when market volatility is high, such a high valuation could be a bit burdensome. What do you think about this part?
Yes, that's possible. It's a perfectly reasonable concern. In the article,
were there any other risks mentioned?
Of course there are. For example, we need to keep an eye on the possibility of new competitors emerging, like Chinese companies developing their own chips. The United States government has also implemented measures such as restrictions on exporting high-performance GPUs to China and tariffs. These factors are also considered risks because they could affect Nvidia's margins. To sum up,
If I summarize it a bit, this article ultimately says that the collaboration between open artificial intelligence and advanced micro devices may look like intensified competition in the short term, but in the long run, it's another example that shows the tremendous growth potential of the GPU market. That's how they're analyzing it. In the end, considering Nvidia's strong market dominance and technological capabilities, it's highly likely that both Nvidia and advanced micro devices will benefit from the growing market. So you're putting more weight on a kind of win-win scenario, right?
yes, that's correct. The market itself is just so big. So understanding these complex dynamics of the artificial intelligence industry and the strategies of companies can be an important guide for your investment decisions as well. Yes.
Lastly, I'd like to leave you with a question to think about. Tech giants like Microsoft and Google will try to reduce their dependence on certain chip manufacturers in the future.
That's right. Then,
What about the possibility of speeding up their own chip development or increasing various customized chip partnerships like the recent advanced micro devices case? It might be interesting to think about how these moves could become a variable in Nvidia's dominance in the long run. Yes.
that's a very interesting question. That's all we have prepared for today. Thank you to all the Mijagwan family for being with us.
Thank you.
The beginning of a small dream is important. Shall we plant a hopeful future together? Growing little by little every day. Is there excitement in your heart? Let go of your greed. It won't be any different this time either. The result is just a continuation of the process, so I'm not afraid even if a dark adjustment comes. I'll hold Miju's hand and move forward, becoming the light of an unseen tomorrow. Happy investing, supporting each other's dreams. Let's walk together down this beautiful downhill path. Happy investing, together with Miju, all of us boldly and noisily until the day we retire all together.